Well, Strides numbers are flashing for you on the screen. The revenue growth is at around 6%. I'm looking at Motilal Oswal's estimates, and that as well was expecting around a 6% increase. So no worries in terms of the top line. The the EBITDA that's been reported by the management is at around 1,200, is at around 120 crores approximately. We'll try to calculate that number and put it up for you. But Motilal was working with a number of around 137 crores. That would mean margins of around 15.5%. And in terms of net profit, they were working with a number of around 33 crores. That appears more or less in line. But the EBITDA number, that's missed expectations at least, because they have delivered a number of around 121 crores. Motilal's estimate threw up a number of around 137 crores. So we'll have to understand why exactly there was that miss. And that explains why the stock has come off the high point of the day. So the margins have come in at around 15.1%. The margin expectations, at least as per Motilal's estimates, was at around 15.5%. So a bit of a miss in terms of the margins. Otherwise, top line appears more or less in line with what the street was working with. And that's where the stock has come off the high point of the day as well, Rima.
Yes, absolutely. The first two quarters of the year were quite, tough for Strides Pharma. I think they reported a loss. In fact, FY18 itself was a challenging year for the company on account of volatility in the tender business as well as issues in the US business. In the prior quarter, at least, they managed to report some profit, and the street was expecting that they will continue with the profitability route and show some momentum there. But as of the numbers that you can see, margins are down year on year, but there is an improvement on a quarter-on-quarter basis.
And I think the US business as well, they've reported a quarter-on-quarter growth. It's coming at around $41 million. I'm looking at the last couple of quarters. It's been slowly increasing because it was at around 26 and around $32 million. So that number has improved gradually to around $41 million odd. That's the US business that we're talking about. Stock has come off, though, the high point of the day. Ekta will fill us in with some more details on that front. But the Bajaj twins, they'll be reporting their numbers today. Okay, all right.
Actually, there's some more details. Strides to exit Arrow for a value of Australian $394 million. They will retain 40 to 50% of the existing EBITDA with 10 preferred year, with a preferred 10-year supply contract and IP for all products. The bolt-on acquisitions to accelerate front-end driven growth in the US. So they've acquired 100% stake in Venson Pharmaceutical. They are converting their 50-50 JV with Vivimed to 100% ownership to take control of the partnered ANDAs and the US FDA approved manufacturing facility. There is also an 80% stake that they're acquiring in Pharma Power Inc. to build out the Canadian operation. So they have announced several corporate actions which the company believes will add new levers to their growth.
Absolutely. I think the street is taking note of all these announcements. The margin miss is something that the street didn't like at all. The stock was closer towards 530 when the numbers came out. It's seen a sharp correction from there, around a 40 to 50 basis points miss in terms of the margins, at least going by Motilal's estimates. And they've done a whole lot of restructuring out there, as Rima just told you. And now it's selling off quite significantly from the top of the day, 5.5% down from the day's stop.
Let's talk a bit about Bajaj Finance, because that will be reporting numbers. Abhishek joins in. Abhishek, we should expect a good quarter?
Well, analysts on street are working with a blockbuster quarter for Bajaj Finance. Given the fact that AUM growth is expected to remain between 35 to 40%, last quarter it was at 38%. In this quarter, the company has had the benefit of the entire festive season falling into Q3 FY19, unlike what they saw in Q3 FY18, where half the festive season fell into the quarter. So sustaining that gross NPA at Q2 level of 1.49% or anything below 1.5% will be positive. We have seen increasing cost of funds for the entire NBFC sector. So sustaining the net interest margin as per the Q2 levels will be positive. NII and PAT is expected to grow at and around 29 to 30% YOY. Back to you.
Okay, all right, Abhishek. Thanks so much for that.